Hey guys, Boris Slash from BK Forex. Welcome to our Forex Day taking us for 9/13/13 dollar fade. As always, trading foreign exchange on margin carries a high level risk, may not be suitable for all investors. I ask you to read this disclaimer very carefully to understand all the risks associated with trading on margin, and to seek advice from an independent financial advisor if you have any doubts. Well, kind of a choppy day today in the markets. Euro not doing very much. It did test 32.50s and held, which is kind of bullish, but we're still being capped here by the 33.20 level. We break this out. If we can just take it out to 33.50, it opens up a run to a double top test. I still think euro has a very, very hard way to go in terms of breaking out fully, because this overhead resistance at 33.75 or 34, 34.50 is going to be a massive, massive pressure against it. If we start to fail here, if we start to basically break down below the 32.50s, it opens up a run right back towards the 3100s. But frankly, the markets are just confused. I think more than anything else, there's very little clarity here, either way, as to whether you're going to have a pro-dollar move or anti-dollar move at this point. And neither side is really showing definitive positive data. The U.S. data was kind of good today, but it had a lot of caveats. European data suddenly starting to crumble a little bit. The industrial production numbers came in very, very weak. So there isn't really any kind of conviction, I think, on either side of the Atlantic as to which side you want to be on. That's why you have this indecision here. And the rally off the lows certainly starting to come back. I think, obviously, of course, everybody looks forward to the taper. But even the taper itself could be very anticlimactic if it's a sort of a very, very modest move forward. So we'll have to see. What is becoming clear, though, and I think is interesting to watch, is the fact that dollar yen still just seem to be having a very, very hard time around this 100 level. Now, we could be in a situation where, again, it could trade above to 100, hold it, and sort of maybe the third time is the charm offensive. If you look at dollar yen on the lows basis, it's still in an upward bias in the sense that we stopped at 99, we held that. If we don't break that to the downside, we would create another higher low and still maintain this sort of a very hesitant but nevertheless clear uptrend. If we start to kind of crumble right below the 99s over here and go into the 98.50s, that would suggest a top here, a lower top, another just sort of a hard break for dollar yen bulls. So very much worth watching this, especially against retail sales tomorrow, to determine whether this is going to be a situation where again the dollar yen rally fails, or whether we can find a third mount above the 100, and maybe the third time it'll be the charm, and we can finally create a significant sustainable rally. Cable trading, I think, best of all in many ways, holding the 50, well, just barely holding the 58s right now, but still holding the 58s. Not much news in front of it, but the fact that data has been very good, and the fact that the BOE is sort of playing defense with their dovish policy, in the sense that the situation in UK is so much better than what the BOE has painted it to be, that it's very hard to maintain an ultra uber dovish policy at this point. Always kind of helping put the bid into the pound, a little bit of M&A flow also helping to put the bid into the pound. But the pound does face a more significant resistance at the 59.60 level. So we have to watch that. But still, if we can take out the day's highs around 58.40 here, the open run towards 59s really comes into play. So very much worth watching. And that in turn, by the way, actually puts the euro pound, which has been breaching this 84, coming back, breaching this 84, now into a very interesting play, because if euro pound starts to decelerate to the downside, if 84 is broken and closed on a closing basis, that would create, I think, a new down leg in the cross, and very much worth watching. For now, we've definitely been catching there's been a lot of support around this 84 level, but it could be a situation where we could get pushed further to the downside, because once I think this low goes around the 85s, 87s, it opens up a run all the way out to 83.50s now as the trade progresses. Last, and certainly very much least in terms of data set, Aussie just broke the hearts of Aussie bulls yesterday. The employment data out of Australia was horrid. They created a big turn candle over here, right around 93.50s. We spiked to the highs and then came right back down to the lows. Definitely going to be, I think, a little bit more of a chop situation. It would be very, very bullish Aussie if we took out 93.50s and held it. But I think that's going to be a tall order for the time being. Much more likely we're going to start to test 92s and again try to test the bottom of this range with 91.50s, 92s as the day progresses. That's kind of how the day shapes up. The U.S. retail sales, the primary event risk going forward. We'll have to see if the dollar can hold the bid against dollar yen, or whether this is going to be the straw that breaks the camel's back and we start to go to the downside. We'll watch everything, as always. Boris Schlossberg for BK Forex, over and out.